Hey everyone, Meet Kevin here. Welcome to Meet Kevin Show episode number 27. Today we are talking about Bitcoin to $1 million, and always remember to buy the dip. But we're going to bring on a guest I'm very excited to have on, the founder and CEO of BlockFi, software app that we have been talking about a lot on this channel. Super bullish on it. Love the interest. I just crossed my first $1,000 in interest on Bitcoin. I've been earning nothing at Robinhood, and here I've now earned over $1,000 just in interest. I'm like, this is great. I've got so many questions. So Zach, welcome aboard. Thank you so much for being here.
Hey, Kevin, pumped to be here, man. Thanks for having me.
So tell me, Bitcoin $1 million, when? I mean, this is crazy. Like, is it realistic? I mean, what are your thoughts? Where's this coming from?
Yeah, so I'm just doing some quick back of the envelope math. Okay, so my view is that one of the things that Bitcoin does is it kicks gold's butt in terms of being a store of value. And that's really a story that you're starting to hear some of the smartest investment minds in the world talk about, that this is gold 2.0 or it's digital gold. Gold today has roughly a $10 trillion market cap. Bitcoin's roughly 1 trillion and trading, a little north of 50,000. I think that the digital version of something could potentially be at least 2x bigger than its physical analog counterpart in terms of how the market values it. So if Bitcoin ultimately gets to a $20 trillion market cap, that's a 20x from here. So from 50K to $1 million. Wow. And I'm not saying that's going to happen tomorrow, but I think that there'll be a time in the not too distant future where we'll be hitting those numbers.
That's crazy. And I mean, what about the risk of all of the other coins? I mean, there's so many of them to choose from. Do I pick Ether? Do we go with some of the new ones, the ADAs? Tell me about this.
So I don't think that Bitcoin is the only thing that's interesting that's happening in the cryptocurrency ecosystem, but I do think that for that store of value digital gold use case, Bitcoin is already too far ahead of everybody else. It's got too much of a network effect going for that part to get disrupted. Now, are there other use cases and other ways that cryptocurrencies are creating value that are also interesting from an investment perspective? Absolutely. I own Ethereum. I own a little bit of Link. I used to own a lot more, but I kind of consolidated around the time that I started BlockFi because I just didn't have time to keep up with the market as much as I would want to be in things outside of kind of the clear market leaders. But I think for the store value, Bitcoin's not going to get disrupted. That doesn't mean there aren't other interesting assets to invest in the crypto ecosystem. And I think that the sector overall is going to stay on a secular growth trend for decades to come.
Now, how was it starting a crypto-based company? I mean, how hard is it? Do you have to register like with the SEC? Like, how does that work?
Yeah, so I've always worked at venture-backed technology companies professionally. So I've got a bit of experience with high growth businesses powered by technology where you're raising capital from venture investors. And I would say that it's definitely not easy. I started the business, we started BlockFi in the third quarter of 2017, and raising the seed round was hard. Launching the first product was hard. Bringing on the first folks on the team was hard. But after about a year, we really got enough kind of positive momentum, and fortunately, the market really liked the products that we were building. We're adding these kind of critical financial services that help crypto investors do more with their assets, and we were getting positive feedback from the market in terms of people wanting to use them. So it got a little bit easier over time. But now we have different challenges. We're a 500+ person company, still growing very quickly, trying to launch new things and coordinate cross-functionally within the org. And so it's never anything that I would necessarily call easy, even now at our current size. But it's definitely easier than it was for the first year. But the entire time, like, there's nothing I'd rather be doing. So it doesn't really feel like work, despite there being a ton of work.
I love that. That's the best kind of work to have. So what are like the risk factors here? I mean, isn't it, we're seeing interest paid on Bitcoin, of between 5 and sometimes 6, 7% on some of the other coins. What happens if the values of these coins collapse? Is there a risk that all of a sudden some of these loans are going to default and we see some issues with getting paid interest or even getting our money back?
Yeah, so a couple of things there. So first off, when you're earning interest on Bitcoin, when you're earning interest on anything at BlockFi, the way we're generating that yield that we're offering you as a client holding assets in the BlockFi interest account is by lending some of the assets that are held in the BlockFi interest account out to borrowers. When we're making those loans, we're making loans that are denominated in Bitcoin for the Bitcoin interest that we're generating for our clients. So there's not risk that, if the Bitcoin price goes up or down, it's going to be harder or easier for us to pay you the Bitcoin interest on your Bitcoin because it's denominated in Bitcoin all the way through. Okay. And then in terms of the risk management, how do we make sure we don't lose money? The majority of lending that we do is collateralized lending, meaning if someone's borrowing dollars secured by their Bitcoin, they're giving us more Bitcoin than the amount of dollars that we're lending to them. And conversely, if they're borrowing Bitcoin, they're giving us more dollars than the amount of Bitcoin that we're lending them. And BlockFi, one of the most critical pieces of technical infrastructure that we've built is our risk management infrastructure, which runs 24/7. It's connected to liquidity. And when prices are volatile in either direction, it issues warnings and margin calls and ultimately liquidations to folks who have borrowed from us. And those liquidations occur before the value of the loan is higher than the value of the collateral. So just to give you a quick, easy example, let's say someone has one Bitcoin. Let's say Bitcoin is worth $50,000, just to make the math easy. An individual could borrow up to $25,000 secured by their one Bitcoin that's worth $50,000. So we've made them a loan for $25,000. Their Bitcoin that's worth $50,000 is sitting on our platform. If the price of Bitcoin falls to around $40,000, that borrower is going to get a margin call. When they get that margin call, they can either pay down some of the loan or put more Bitcoin in or do nothing. If they don't do anything and the price of Bitcoin falls further, let's say it goes down to 35,000, we would sell some of their Bitcoin to pay back the loan and rebalance that loan to value ratio in that position. So that happens well before the price of their Bitcoin and the value of their Bitcoin is worth less than the loan. And so that kind of dynamic is what has enabled us to lend in the cryptocurrency market starting in January of 2018 through multiple periods of volatility and have perfect performance. We've never lost a penny, on our loan books or certainly not for our clients.
So I guess the big risk factor would be it'd have to be something crazy, like it flash crashes down to 5K or something like that. And then now it's like you want to liquidate, but maybe you can't because nobody's buying until the price is like 5K. What happens in a case like that? Because now you're upside down. If you lent 25K, flash crashed to 5, couldn't margin sell quick enough because all of a sudden there was no buyer over 5 anymore. What happens in a situation like that? And it's extreme, I know.
Yeah. So look, I think a flash crash to 5K on multiple venues is highly, highly, highly unlikely. Maybe on one exchange they have an error, the order book got a little wonky. It's possible, but across spot and derivatives and OTC, onshore and offshore, I think it's incredibly unlikely in every scenario except some type of black swan. And we actually had a black swan with COVID and markets digesting this, virus and what the implications for it spreading around the world were going to be about a year ago, last March. And Bitcoin actually went down 50%, not in a single tick, but in a single 24-hour window. And in addition to that kind of loan level risk management, what we do at BlockFi is we also manage risk at the portfolio level. So we have the ability to hedge when markets are getting particularly volatile and lock in the ability to sell Bitcoin or buy more Bitcoin at future price points using the options and derivative market. And so we do that. And we also have BlockFi capital, our equity. We recently raised a $350 million Series D on top of capital that we've raised before that, which we can use to take certain positions in the market that may be valuable either to the market or to our risk management interest from time to time. So the example from a year ago when Bitcoin went down 50% is that two things happened. One thing is that our risk management system, worked perfectly, but we also hedged at the portfolio level when the market started flashing these yellow signs early on in the day when Bitcoin was down around 25%. Two, we used some of our capital to start buying Bitcoin at a certain point that evening when the market was incredibly illiquid, and where we started to feel like, someone needs to step in a little bit here, and start to act as a little bit of a backstop for Bitcoin. And, both of those things enabled us to not only on March 12th be literally the only lender in cryptocurrency markets that was active. Every other lender shut down, and they were saying, we need to, understand what's happening in the market. We need to manage the risk in our books. We need to kind of, see what tomorrow is going to bring. BlockFi was open for business. We were supporting our clients. And the other thing that we did that was, I think, very different than a lot of other platforms is we worked with clients who, may have experienced something like, well, I tried to send more Bitcoin, but I wasn't using a wallet that has an ability for me to implement a dynamic fee. And therefore, I initiated a transaction to send BlockFi more collateral, but it didn't actually hit the blockchain because everybody was trying to move Bitcoin around and I didn't have a high enough fee. So it got to you 12 hours later than when I sent it, instead of the normal, 10-minute processing time for Bitcoin. And we worked with in those scenarios because, we're not building a business that's focused on extracting as much value as we can today or tomorrow. We're really thinking about a relationship with our clients over the next 5, 10, 20 years. And so that's what's important to us. I think our scale and capitalization and experience in risk management is something that really stands apart from other folks that operate in this market.
Nice. So yeah, I mean, that's interesting because when the market crashed there in March, there's no Fed coming in to bail out the crypto market, right? There's no lender of last resort. And it sounds like that was almost you guys. So you guys were liquid.
Yeah, I mean, look, we're the largest, and we think of ourselves as certainly a company that's interested in growing more client relationships and offering more products to our clients and being successful from a capitalistic perspective. But we also view ourselves as a company that's an increasingly important part of this crypto ecosystem, and that comes with certain responsibilities. It comes with marketing and public relations responsibilities in terms of us being a good advocate and educator and lobbyist for the industry. It comes with responsibilities in terms of our market activities and doing things that promote liquidity, that promote adoption within the crypto market. And it comes with responsibilities in terms of how we interact with our clients. Like if we don't provide good client service to our clients, they are not only going to have a bad impression of BlockFi, they might have a bad impression of the crypto market. And so we take all of these things really, really, seriously.
Now, by what measure are you the largest?
By the measure of total assets on our platform in a U.S. regulated and retail-facing platform. So BlockFi today has over 17 billion in client assets, and to my knowledge, no one is bigger than that.
How do you compare yourself to Voyager? Voyager says, they're tiny. I think their assets under management is it's under $1 billion, right? They're growing, but I'm pretty sure it's under $1 billion. You've got, even if they're at $1 billion, you're 17x that. How do you compare to them? They're offering interest on I think 21 coins or something like that. Can you speak to that a little bit?
Yeah, sure. So we don't offer interest on as many coins as Voyager. Importantly, we generate and manage the risk for all of the interest that our clients are receiving at BlockFi. My understanding of Voyager's platform is that they're working with a third party or a mix of third parties to generate that interest, whereas when clients hold their assets on BlockFi, it's just us doing the lending, managing the risk. You know who you're working with. It's not getting, kind of repassed on to another group, which introduces, more risk. Additionally, I believe that Voyager has a token where you might get more or less interest or other kind of benefits on the platform in exchange for buying their Voyager token. We decided really early on at BlockFi that we weren't going to issue our own token. We didn't think it was particularly helpful in terms of creating the products and services and adding the value that we wanted to for our clients. So, you can access the best of what we have at BlockFi without having to buy, our own native token. But I would say those are probably
what's the downside? Like, why not have your own token? And how do they even pay? Like, how can people make interest on their own token? Maybe you could speak to that a little bit, or maybe you saw some risk factors there.
Well, the risk factors come from the regulatory environment. And so, we're domiciled and regulated as a financial services company in the United States. And that comes with a whole host of, responsibilities and consumer protections and requirements of things that we have to do. Kind of similar to Coinbase in a lot of ways in terms of how we're structured. Generating interest on your own token, I mean, there's one really easy way to do it. Like, if I tell you, Kevin, I have 100 ZAC coins, and you can buy a ZAC coin for $1, and I'll pay you a 10% interest rate on any ZAC coins that you buy.
Sure. It's just like a bond.
Yeah, and I can just make more ZAC coins to use to pay you interest.
Oh, right. Good point. I guess I have to look into it, but I'm sure there's probably some kind of tether or peg, I should say, to the dollar. But that's a good point.
Yeah, I mean, probably not with like a native platform token. There's probably not a peg to the dollar, but I mean, the easy thing to do is just keep some of the ZAC coins that I made up out of thin air over to the side, and then shuffle them over to you to pay you interest at some point, or just print more of them.
Right, essentially, yeah. Wow. Okay,
that's the cool thing. That's the cool thing about earning interest on Bitcoin. Yeah. It's a capped supply asset. And so when you combine the store of value with compound interest, you get investment results that are quite simply phenomenal. Like, the average BlockFi client a year ago had an account size of $10,000, and today the average BlockFi client has an account size of $50,000.
Wow! Congrats.
And that's not necessarily because they're depositing more money. It's because
the appreciation has been incredible. Yeah.
Yeah, the price of the assets that they hold in their BlockFi account has done really, really well, and they're earning compound interest along the way.
Jeez. So Voyager right now, I believe, has somewhere around a $3.9 billion market cap. But that's if I'm looking at Canadian dollars here. Let me see if I can change that to USD really quick. USD, it takes it to about 3.1 billion right now in USD. When are you all going to go public? I mean, you just raised money at 350 mil. That's, 1/9 the valuation. And you've got 17 times the assets.
We raised 350 million at a
you raised 350
at a $3 billion valuation.
Okay. So similar valuation, but 17 times the assets.
Yes. It used to be that there was a premium in private markets relative to public markets in terms of how companies are valued. That's flipped on its head a little bit. And that round that we recently announced was actually priced and signed in January. So I think if we were to raise money again today, or if you could look at a current value of BlockFi, which would be the equivalent of what Voyager is trading at today, it would be much higher than 3 billion. But look, we're working on going public as fast as we possibly can. I hope we'll get public sometime in the back half of this year. If that doesn't seem like it will be the case, then I think we will likely work on doing something where we enable our clients to at least a subset of our clients who are accredited investors to buy equity in BlockFi before we go public. But there's a lot of things that go into it.
That's brilliant. That's a really brilliant idea right there, because nobody, I don't think, I mean, I'm sure somebody does it, but it's not popularized, right? Geez, I mean, what a motivation for people to like, oh my gosh, I'll come over, invest money as an investor, but then I can also invest in the company. That's a brilliant marketing idea.
Yeah, I mean, look, I've been trying to figure it out for a while. I think we're making some progress. It's hard to do. It's hard to do partially because operationally it's intensive. There's a lot of legal paperwork that goes back and forth when you're investing in private companies. There are some platforms that do it, but they charge these ridiculous fees where it's like you'd have to
commissions.
You'd have to pay them 10% just to be able to use the platform. And it's like, well, that feels kind of like a ripoff. And then there's regulatory considerations, but I think we'll work through those. And we're very excited about the idea of letting our clients have skin in the game in terms of ownership of BlockFi, and whether we do that by becoming a publicly traded company or we do something in the private markets first and then go public later is still TBD, but that's the direction we're headed in.
Yeah, I mean, that's something like Airbnb even let people buy, I think it was up to like 10K worth of shares at IPO price. They carved that out of the allocation. Brilliant, for their super host. So do you have a preference, direct listing, IPO, SPAC? And I know if anybody's wondering why I'm asking questions fast, is because we've got about 8 minutes left.
I don't have a particularly strong preference at this point. The way we're thinking about it is there's a few readiness boxes that we need to check. And once we check those boxes, we'll evaluate all three of those options at that time. And then based on market conditions, one of them will look better than the others. And that'll be the one that we go with.
That makes a lot of sense. So no commitment to either direction, but you're open to all three of them. Do you think you'll do, let's say the accredited thing didn't work out for your clients, do you think you'll do another private round, with the sort of an updated valuation between now and then?
I would say it's a coin flip right now. It really depends on the public market readiness timing, and I could see it going either way.
Yeah, makes sense. So let's see here. Can you talk a little bit about cold storage with Gemini, your partnership there? You guys ever going to do any of your own cold storage?
So it's something that we're actually starting to look at a little bit. So right now, Gemini is our primary custodian. We also have custody relationships with Fidelity and BitGo. But the majority of assets, when they're not being utilized for lending, are just sitting in storage with Gemini's custody product. We decided to work with them early on because they had a good amount of insurance coverage. They had a very high performance and kind of battle tested platform that had worked perfectly for a long time. And they had been through their SOC 2 audit, which originally, a few years ago when we started working together was unique. Now a couple custodians have reached that point. But we have a great relationship with the team. Winklevoss Capital is an investor in BlockFi. So it's been a really, great partnership. But there's some constraints, so there's like, for example, we can't custody USDC, which is the most popular US regulated stablecoin on Gemini's platform, because they have a competing stablecoin, GUSD. So there's some constraints, when you get into the weeds of how these things work, that
it sounds like the weeds.
Yeah, it's that have caused us to think about what would either buying or building our own kind of internal custody capability look like.
Now, I want to ask you about spread. So obviously there's a spread when you buy Bitcoin, but you pay this amazing interest to where it almost doesn't matter, because you want that interest, especially if you're buying hodler. I did a price comparison between you and Robinhood, and I don't think Robinhood beat you guys by about 3 months worth of interest. Now, I'll make more money hodling with you guys. But what's going on? Are they loss leading? I can't wallet transfer at Robinhood. If I wanted to sell or transfer at Robinhood, I'd have to pay taxes. It's a disaster in that sense. But can you speak to that a little bit?
Yeah, sure. So there is a spread on BlockFi's trading product, which, depending on market conditions and the order size, can be up to about 1% of the trade value. So depending on the type of trade you were looking at and comparing us for Robinhood on, it's possible that they had a cheaper price. We're always working on ways to kind of bring that cost down, but we try to stay cost effective versus Coinbase, PayPal, and Square are the folks that we've tried to make sure that we stay ahead of in terms of the pricing on BlockFi's platform for the trading product.
Gotcha. Okay. What about like what's the risk factor for hacks these days in Bitcoin, or even just y'all custodying, I don't even know if that's a word, our cryptocurrencies?
Well, I would say personally, in terms of securing your own account, the risk is very, very high. One of the things that is a little bit different about BlockFi versus other platforms is that we have a mandatory 24-hour window that we require goes by in between the time someone initiates a withdrawal from their account into when we process that withdrawal. And that's there specifically for security reasons. And every day, every week, every month, we have clients who, we end up saving a lot of money for because something happened. They didn't have things like 2FA or whitelisting turned on as security features in their account. Their email got hacked into. The hackers these days, if they get into your phone or your email, the first thing they look for is, do you have a Coinbase account or a BlockFi account, or do you have crypto? Because if they can get their hands on the crypto, it's really hard to get it back. So I would strongly can't strongly recommend enough that everyone doing anything in crypto, including activity on BlockFi's platform, use two-factor authentication to secure your account. If you have multiple crypto wallet addresses, turn on whitelisting, which is something where you can save a wallet address, and it's basically a list of kind of permitted withdrawal addresses. What that protects against is, if somehow a hacker was to get into your personal account, they couldn't withdraw anywhere other than the addresses that you've already identified as also being controlled by you. And just be vigilant. Change your passwords. Use password managers. Do whatever you can to protect yourself. BlockFi as a company, we have invested tremendously into our cybersecurity team and infrastructure. So we've got over 20 folks now at BlockFi who are just on our cybersecurity team. Our platform is safer than it ever has been, and it's always been really safe in terms of not being able to be penetrated. But we do see just a tremendous amount of personal cybersecurity breaches, which can have an impact on your crypto accounts if they're not properly secured.
That makes sense. I mean, and I love your product. And I want to quickly mention that if anybody's watching, interested in BlockFi, make sure to go to metkevin.com/BF. That's my BlockFi affiliate link. And get up to $250 for free. Now, question for you. Two more before we go. So we have to be a little quick. Regulation. What kind of concerns do you have for that? There's Canadian regulation. There's U.S. regulation. There's Janet Yellen. Can you speak to that?
Look, I think you're going to see some folks who are less educated constantly kind of spread FUD like, oh, crypto might be used by bad people. Well, guess what? All kinds of money are used by bad people. The problem isn't whether it's cash or dollars in a bank account or Bitcoin. The problem is that there are people that do illicit activities, and they're going to use some form of money for that. But I think the general trajectory of regulation around crypto in both Canada and the US has been very positive. And our political leaders understand that this technology, as with other new technologies, is an area where the United States and other democracies and free markets should lead on the playing field of global competition. So I don't expect anything negative. And BlockFi is regulated like a fintech company, so we have various federal and state licenses that we manage. So in general, those interactions have all been very positive. I mean, 3 years ago when we started, folks had no idea what Bitcoin was. So we would often get the response from regulators like, it sounds illegal. How is this not illegal? And we're like, just because it's Bitcoin doesn't mean we're doing anything different than what happens with normal fintech companies. But
So,
overall,
so no India risk. India trying to ban Bitcoin.
no.
Not coming here. Okay. Last question. A lot of talk about massive inflation coming with the $1.9 trillion stimulus, the $3 trillion maybe upcoming infrastructure package. I want to hear your concerns. Fed Chair Jerome Powell says we're going to see temporary inflation, and then we're going back to struggling to be at 2% inflation. First part is, do you think we're going to see long-term inflation over this next decade? And the second part is, if we don't, will Bitcoin go down, or will cryptos potentially go down, or do you think these things are just going to keep growing and growing? We're going to get to that $1 million.
Yes, I think we'll see higher inflation. I think we've already seen higher inflation in asset prices, which aren't a big component of CPI. But I mean, look, if you've pulled up Zillow anytime in the last few months, the prices are a lot higher than they were 6 months or 12 months ago if you're buying something like property. So I think we've already started to see it. I don't think we're going to see, I'm not of the view that we're going to see hyperinflation that puts, the strength of the dollar as the reserve currency of the world at risk. But I do think we will see higher levels of inflation. Even if I'm wrong and we don't, do I think that it's bad for Bitcoin? Absolutely not. Because I think Bitcoin is two things. I think it's one, store of value, kind of like digital gold. And two, a kind of venture capital type, network effect bet on this new crypto ecosystem where Bitcoin is, the largest and market leading asset today. So I think Bitcoin can do well in a lot of market environments. I think it's going to keep going up no matter what happens to inflation. Maybe it does better on the margin when folks are experiencing or expecting inflation to happen. But I think it'll do great even in times where that's not the case.
Nice. Great answer. 10 seconds. When are you going to add ADA?
As soon as we can.
Awesome. Great answer. Thank you so much. Any last remarks you wanna bring up or mention?
Feel free to hit me up on Twitter. I'm very active. I'm BlockFi Zach, and we didn't touch on this at all. But the thing I'm most excited about for this year is the Bitcoin Rewards credit card, which we're launching in the second. Get ready to earn Bitcoin with every purchase that you make.
Absolutely amazing. Well, super exciting. Really appreciate you. Thank you so much for being on. Stand by for one moment. Folks, for you watching, thank you so much for being here. Consider subscribing, sharing the video if you found it helpful, and we will see you in the next one.